Is the Fed going to ease rates in 2025?
No, they've already backpedaled. They had moved to one rate cut in July of 2025. A lot can happen there. I am predicting a big sell-off in 2025.
Small business optimism in the last 3 readings of it since November has had the largest up move in the history of the index. Oh, look who is here. This is Bill Fleckenstein.
A seasoned financial expert and former hedge fund manager, is famed for his bold market predictions and sharp critiques of Federal Reserve policies.
I'm a complete idiot. Took East Coast time as West Coast time. Anyway, I did the math all wrong.
As the author of Greenspan's Bubbles, he's a trusted voice in exposing economic risks and navigating market volatility.
Being on this show, a complete idiot still makes you the smartest person.
I don't give a damn about politics. I care about economics and financial long-run outcomes. How can Apple have a $3 trillion plus market cap, have a forward estimate of about 30 times? They haven't really innovated anything in several years. How can that be? If you have strong economics and strong financial wherewithal, then you can go do good works. If you try to do good works and you blow up the economy and the financial markets, you're toast. That's my philosophical perspective.
Welcome to the Futures Edge. I am Jim Iuorio. That's Bob Iaccino. Thank you guys for joining us. As always, thank you for the support. You're giving us the DMs, the retweets. We are humbled by the support. Bobby and I have been in legacy media for a long time. Didn't like it there. Always at the whim of some overzealous producer or sponsor. Here we give our honest opinion. Might be crap, but it's our honest opinion. Thanks to our sponsors, Hardcore Italians. Go on their website. They have funny stuff. Use our promo code for 15% off, which is FU. It stands for Finance Unfiltered. So get your mind out of the gutter. Also, Independence Arc in Arkansas. Some of the best meat I've had. They send it to your doorstep. They're vacuum sealed and frozen, and it is absolutely fantastic. Bobby, how you doing?
Good. How you doing, bud?
Good. Was that a decent intro? You're going to grade me? You're going to correct me? You're going to edit?
That's good. I wanted to say I'm not in front of a calendar. So again, we record these shows. I'm not sure when this show is coming out, but if you get to it before Valentine's Day, Hardcore Italians has a great shirt where it's those little pink hearts. Remember all those little hearts when we were kids?
Yeah.
But everything on there is written in Italian. And I just thought it was hysterical. It was like Ti amo and Mi vita and all this stuff, all the stuff they used to say on those little hearts. It's a really cool shirt for someone you love that is Italian or pretends to be.
Yeah. And anyway, and I know people who've grown up in Italian neighborhoods who aren't Italian. In the movie The Feast of the Seven Fishes, when the one kid is going on and he's like, so everybody in this town is Italian. And the people who aren't think they are by now anyway. And, it's just kind of, it passes. It's communicable.
You know what's interesting about Italians, and I don't want to get off on a tangent on this because we want to talk to Bill.
We already are, but let's go.
Yeah. It is the culture of Italians are so loud and out there, and it becomes very apparent that Italian immigrant culture in the United States is very similar to Greek immigrant culture, Macedonian immigrant culture, Jewish immigrant culture. We're all very, very similar in terms of how we tan in the sun, how we're like very family oriented, how we yell at each other and there's no hard feelings. And so it becomes one of those things when you're in a dominant Italian neighborhood, like a couple of my Macedonian friends in Chicago, they just fit in. They don't even say they're not Italian. They just fit in. They come to my ma's house, all that stuff. It's just all the same.
My cousin and my brother, they both moved away from Chicago a long time ago. One lives in Arizona, one lives in Colorado. And they hear the epic battles that we have where we scream at each other. And they then forget that we forget 10 minutes later. And they'll 2 weeks will go by and has everything settled down? And we'll all be like, what are you talking about? Is what settled down?
Last thing on that subject, a friend of mine married an Italian girl. And I told him, a friend of mine down here in Southwest Florida, I said, I don't think you're ready for it. I mean, I know you guys love each other. I think you guys should get married, but I'm just giving you a heads up. A little while ago, him and I went out and he's like, yeah, she'll be yelling at me about something. And 5 minutes later, she's like, so you want dinner? And I'm like, wait, aren't we fighting? She's like, no, we didn't fight. What are you talking
about? Called talking. Okay. Anyway, is the Fed going to ease rates in 2025?
I do think they will backpedal on that. They've already backpedaled. So no, is what I'm saying. I said that in a lot of words. I said that in a very politically correct way. Fuck no. is what I'm saying, because you're seeing that getting priced out of the market. As of this morning, again, you guys are watching this 2.5 weeks from now or so. But as of this morning, they had moved to one rate cut in July of 2025. A lot can happen there. I am predicting a big sell-off in 2025. So if they do, maybe it's during that, but I think they're going to have to walk away from that. I really do.
Okay, so I kind of think there might be some hard times in equity markets too, just based on some of the things. Like, we're recording this on Tuesday, the whatever date is, the 14th, and the market started out great with the lower than expected PPI number, lost that bid. I think the market keeps looking at higher interest rates, going, crap, we can't really rally if there's higher interest, meaning cheaper bonds that people can buy instead of stocks. So then they lose their bid. So I do think that'll happen, despite the fact, did you see the small business optimism numbers that came out today?
No, I actually missed that.
Okay. Small business optimism in the last, I think it's like the last 3 readings of it since November, has had the largest up move in the history of the index. Okay, so you can say what you want, that it's soft data. It's about the promises that Donald Trump's made, but it's not about the implementation of any of those promises. I don't give a shit. What it is saying is that the people who are the ones who spend the money, who pull the levers, who hire the people, who buy the capital, look who is here. This is,
you guys,
Bill Fleckenstein. How are you, my friend?
I'm a complete idiot. I took East Coast time as West Coast time. Anyway, I did the math all wrong.
Being on this show, a complete idiot still makes you the smartest person.
The guy in the room. Yeah, I wouldn't worry too much.
I don't know if a guy can't tell time. I don't know why you want to talk to him.
No, it's because you're focused on other things. Like, I try to explain this to my wife when I can't remember to put the toilet seat down. When you're as high level as I am, you're thinking about high level things. I can't remember shit like that. But anyway, she does not accept that explanation either. So, Bill, the question I just asked Bobby, I want your opinion of it. Do you think the Fed is going to ease rates in 2025? And why not? You say no.
Not as currently planned. I think that they will only be able to cut rates in the wake of some sort of a disruption in the stock market, i.e. a decent sized break, or if sort of disruption that comes to the economy, which I can't really figure out how it comes out of the blue, something big and negative. I think they were wrong to have cut as they have so far. It would appear that the bond market has the same view.
No question.
Think bond investors are worried about 2 things. 1, supply, and 2, the consequences of Fed policy, i.e. inflation and the stickiness of it. I suspect that this backup in rates is quite a big deal, and it's going to be very tricky for the Doge Commission, or whatever you want to call it, to cut expenses enough who really matter. When you look at the composition of the budget, which I'm sure you guys have, if they could cut $500 or $600 billion, that would be heroic.
Yeah, no doubt.
But that's not going to move the needle. And to do anything seriously meaningful will require some kind of a financial crisis to scare people enough to be willing to do things that are unpopular yet probably necessary, like means testing Social Security and things like that. Now, for perspective, we had a pretty serious crisis in 2008 when the lack of discipline on the Federal Reserve and the banking system nearly took the financial system to zero. And all we got out of that was Obamacare. So I think I want to be optimistic about what these fellows can do at Doge, but then you have to be practical about what the politics is of getting it passed. So I got off on a tangent because I think you need some serious weakness to get the Fed to actually be able to cut something that made them feel where they thought either the economy is weakening or something drastic was going to happen to inflation. So my answer is no, I don't think so. Barring an accident, I don't think they can cut.
I agree with you. So this second part, it's a 2-part question, because you mentioned the Fed being perhaps too easy and supply driving up bond yields, which I stopped mentioning supply. What was conspicuous, you didn't mention Donald Trump, because it seems to me that the market looks at 2 ways that he could be inflationary. 1, tariffs. 2, if he cuts regulation and cuts taxes, could spur aggregate demand on the short end without, the corresponding supply solutions. Do you think those are real concerns in the inflation equation?
Well, one of the things that doesn't get discussed in fixed income is psychology. And by that, I mean, those of us that have been around the market for stock market for a while all know about Soros's theory of reflexivity, and we've all seen it at work, and we all believe it to one degree or another. Anyone that's been successful, I think. There's an element of that in the bond market. There's psychology about inflation for individuals, and then there is the psychology about what's the government liable to do about these problems. If somehow Besant and Trump can convince the bond market that they're actually going to make some improvements, maybe they can finesse it along and have rates not back up a lot. I think that's a very tall order, and you're going to need some serious magic wand waving to get that to happen. But, who's to say it's impossible? I'm skeptical. I'd like them to be able to do it, but I don't see how they can. So I think the bond market is probably a little more. This backup in rates since the Fed cut now has been what? So now we've got 4 months of it. It's kind of a short-term thing, but it's pretty dramatic to see them cut 100 basis points and see the long end go up 100 basis points. That all happened before Trump really got on the scene, or was clear that he might win. So some of it was at work anyway. Maybe part of it is what they fear from Trump, but then they can also get excited about Trump. I think equity markets are going to get more excited about the Trump administration probably than bond markets, would be my guess. Look, he can be a wild card so many ways, so many different times in one day. I don't know how you really make a lot of serious dollar decisions based on what you think he may or may not do, right?
Yeah, we got to wait to what he does do. Bobby?
Yeah, so Bill, I'm taking sort of a different angle. I think we get to the same place, but I actually think one of the number one things that Trump has to do in the first however much time he has, I don't know when the Tax Cuts and Jobs Act actually expires. I know it's sometime in 2025. So it seems to me like that has to be sort of priority one. Because he's talking about cutting taxes, and certainly it's a much bigger tax cut to get through Congress if those original 2017 tax cuts expire, right? Because you got to get past that hurdle and then further on, number one. Number two, you did a podcast with Adam Taggart, who I think is great. I love Adam. And I didn't get a chance to listen to it yet, but the thumbnail is basically rates go higher until the stock market falls. So question number one, is there a cap to that in your mind? And question number two comes off of Doge, which you were just talking about. I think that stocks have a chance to fall 15 to 30% in the first, say, 3 quarters of the Trump administration based on possible Doge success. In other words, if that stock market drop happens, it's theoretically a good thing and possibly a multi-decade buy, because that means Doge is having some success. So what's your thoughts on any of what I just said?
The short answer of what I went into in great detail with Adam was that bonds tank until stocks break, which is kind of what you said, I think. Now,
yeah, I referred to yields going up. So.
Yeah, okay. But so now, if let's say that kind of played out, and let's say it looks like Doge is doing some serious work. If you got a big enough, if the market broke 15, 20%, like you're suggesting, which is certainly possible, easily possible, X whatever the passive bid has to say about that, you could have a situation where there could be then some weaker economic data, and while people get more euphoric about the out years, right now they think things are going to weaken, and so maybe that takes inflation expectations down a little bit. And then maybe in there, the Fed could ease a little bit and they get the bond market to go along. The bond market, I think, is going to call the shots. I mean, so here we are at 5% on the longer dated paper. How that trades is going to have a lot to do with what happens. I mean, we still have the mindless passive bid that's there every day, but if something happens in employment, that can change. So again, I think what Trump does and when it happens is how it's perceived. If they can engineer some weakness in the stock market came with weakness in the economy, that might take a little off inflation expectations, allow them some wiggle room, some group of things like that. So I think that's just a slight shift from this scenario you sketched, I think.
It's very slightly different. So this is really to both of you, but to Bill first. Obviously, one of the things that Elon Musk and Vivek Ramaswamy have talked about Vivek. He's been on our show a while back. Haven't been able to get him back on. I guess he's busy. Yeah, they basically said that they think back to work is going to eliminate a huge portion of jobs. In other words, one of the first things they're going to do is require everybody that works for at least the executive branch of the federal government to get back into the office, because supposedly only 20%, 30% of the work people actually come to the office. And they think there's going to be a bunch of resignations, and thereby they're going to save on severances and everything else. So I wonder if you guys think that that's actually going to happen or not, or is that just it's going to be a much smaller number than people think? Number one. Number two, how do we feel about Trump's? Is Trump going to be happy if they're able to engineer a little bit of a drop in stocks, which I think is necessary, quite frankly, in order for the longer term, the end of the 4-year term, to be something that people talk about for 2-3 decades from now? Is he going to be okay with that, with his personality?
So first of all, I think the answer to that is no. I think he's very reactionary, reacts to the moment. And that's one of the things. But Bill, for you, I'm making the guess that you did the same thing. I voted for Donald Trump. I am not a huge fan of Donald Trump. I think he's kind of scattered. He's all over the board. I think when he says things like he wants to cap credit card rates, he just says things that sound good at the moment. And I only take him half seriously what he says. Bobby always says, take him seriously, but not literally. And I believe that to be the case. So I think he's not going to be happy with the stock market going down. And I think he will try to push back. He'll try to push back on the Fed. He'll even try to push back on Vivek and Elon. What do you think, Bill?
I'm sympathetic to what you said. The question is, has he become a little shrewder about being president after what happened and what he's seen?
That's a great point.
One of the things I was blown away with last time was he was barely in the job, and we were getting all kinds of leaks that clearly came from inside the Oval Office. And I thought to myself, why is this getting out? I've never seen this before. I've been paying attention for 40-some years. This never happened before. So he appears to have learned a lot, the way they're trying to hit the ground running with real picks this time. He said that he got a few of them foisted on him and didn't really have the pick of the litter last time. This time it looks to me he's putting serious people in every role, whether you like each one of them or not. Collectively, it's an administration that looks like it wants to get things done and not just grift for down the road, right? In that vein, if he's become more of an adult, so to speak, would he be able to understand that a weaker stock market, that's what happened to Reagan. Now it was different setup, because we had Volcker was trying to break the back of inflation, but we had tax cuts coming. What if the market went down and Trump said something like this? Normally I'd be very upset about this stock market going down because I'm the greatest president of all time. But in this case, it's just adjusting till we have some short-term pain. We're going to have a long-term gain. And God damn it, is the future going to be bright when we get on the other side of this in just a few months or whatever, right? I don't know that he's going to do it. I just made that up. But the thing about him is he's very unpredictable. And people think they know what he's going to do, and sometimes he does, but sometimes he doesn't. So if they were smart, they would lay the groundwork for pain in the short run, because we're going to take it one way or the other. Now, they can't get much done without pain, right? The beauty of this administration, as it looks, is that if we were to have some kind of a financial accident, it can't be the banking system this time like it was in 2008, but the stock market's so crazily priced, and there's so much crazy mechanical parts to it that boost stock prices. Has nothing to do with what we grew up learning. If we were to have a big break, that might actually help them for the longer term. So I just don't know what he's going to do. I'm trying not to have a big opinion, other than it does seem to me like he is better grounded than last time. Now, maybe that's an easy bar to get over, but nonetheless, if we were to have a crisis, you now have serious people, and we might come up and we might be able to really attack some of these issues. The fact that they didn't means test Social Security coming out of the 2008 crisis was mind-boggling to me. Just to pick one thing that makes sense to everybody.
Yeah. So you mentioned a second ago, you said some of the machinations of the equity market. You worded it a little differently. You mean essentially like passive ETFs, where the allocation of capital is not like we learned it's supposed to be, where someone has a great company.
No, I don't mean.
Is that what you mean?
I don't mean passive ETFs. I mean the passive bid from Vanguard and BlackRock. Mike Green has, talked about this quite a lot, made me aware of it 4 years ago, and it really changed my approach to the stock market, because it finally explained to me why things were happening that made absolutely no sense. And thus, the amount of activity on a daily basis that is a function of the passive retirement account money that Vanguard or BlackRock manages is might be in the 40 to 45% range. That has created the momentum and distortions of the cap weightings. That's why these big market caps would have the big weightings in those indices, have the crazy valuations that they do that we would never have seen in the markets that we came up with, right? A company that's got a several $1 trillion market cap could never have a big PE. I mean, because it doesn't matter. How do you grow? How do you grow that? How do you, now that's not to say one company might be able to do it, but across the board, there's all these distortions. But they're simply a function of the money goes into the target date funds, and those companies get cash. They buy stocks. That's it. So that is part of the mindless bid that we have on a regular basis that makes the stock market not the discounting function that we grew up with, and more of a rear view mirror trailing entity that is a consequence of employment, which is a trailing indicator.
Oh, so because of the employment, it's retirement accounts.
Then you can add all that other stuff on top of it. The ODTE, the passive. The ETFs aren't purely passive because there's only a group of stocks they'll buy, and they got to get money coming in. I meant this is sort of the systemic passive.
No, I love that. Okay, before I give Bobby the next question, I just had a quick thing, because you said about Trump being a different president this time, and I agree with you on that too. Do you think Javier Milei, he has had an influence on the way conservative, fiscally conservative parties, whatever, look at things? Like, maybe you can get people to accept some pain if you promise blue skies on the other side and then achieve those promises. Do you think he matters to this world?
I think he does, because I think people that are inclined to be in favor of Trump's principles, which is to say anybody who has an even rudimentary understanding of economics and finance, see what he's done. And that's not so dissimilar to what Reagan did. I remember it pretty well. I was in the investment business then. It was different. I mean, the budget deficit was a much smaller. It's like 1/3 of GDP now. It's maybe 4 times bigger as a percentage of GDP. But that was their strategy. And so I would think they would go to school on that a little bit. And that's kind of what I said, where, we get some bad news, and instead of trying to rail against it, like it's not my fault, just say, look, these guys created a problem. We're trying to fix it. In the short run, there's going to be a little pain. It's like if you're trying to get off, if you're an alcoholic, when you dry out, you're going to go through some pain, but then you go to rehab and then you have your life's better and everything works out in the end. Some variation of that. I don't know, but
and that's
given the people he surrounded himself, I could see him spin it differently. And so, yeah, I think what Milei's done is matters.
Did you guys see 60 Minutes with Michael Lewis?
No, tell me more. Michael Lewis was one of my favorite writers, but when he talks, sometimes I want to punch him in the head. Tell me.
Basically, I'll just give you like the first.
Thank you.
I'll give you the first few minutes of the interview, and essentially, it's a quote unquote expose about the front running by high frequency traders. That is basically the only legal front running out there. Which, again, not necessarily true. We were allowed to front run on the trading floor years ago, and that was actually a rule that had to be passed. So, a buddy of mine sent that to me, and I said, we all sort of know this, but what am I supposed to do about it? Like, why are you sending me this? So I just wanted your comments on it, if you saw it.
All right, I want to speak to that. I saw that clip, and I thought he wrote the book about the electronic trading, right? So that's his contribution to, and it's true, high frequency trading. But remember, the other side of it is, when I was starting out, there were a lot of OTC stocks that had a buck spread. So now every spread's 2 pennies and it costs you 4. I mean, that is a angst over nothing. The real, to call it rigged based on that is kind of silly. I think it detracts from his credibility. If he had gotten into the passive bid and the dangers that it poses, as Mike Green has so eloquently done, that would have been important. I don't know what percentage of the population truly understands this and how dangerous it is, because at some point it won't be big enough. Either the market cap will get too big for the bid because you got enough distortion, or enough layoffs happen, or they have to reallocate some money to bonds to keep the balance, as they did in 22, which is the reason why that was a train wreck in both markets. That's the real danger. That's what's totally changed the market, that in QE, not high frequency trading. I mean, come on.
It's funny you say that. So that brings me to not the next point I wanted to make, but based off of what you just said, Michael Lewis needs these books, right? And the headline being the stock market is rigged. Again, the three of us were all just like, okay, we knew this. I mean, but my response of what am I supposed to do about this was because my average hold time is 26 days. And if I'm trading stocks for myself and my family, I'm on a zero fee platform that I look at it as my fee. I don't look at it as anything new. That Citadel is going to come in and take 1/8 of a cent from me on a trade that I'm going to hold about a month.
Yeah, God bless.
And Bobby, you do agree with what Bill said too about that same mechanism has added some liquidity in certain instances as well, right?
Absolutely,
Like spreads between indexes. If an algo is trading the S&P against the NDX, or I don't know, you know what I mean? They make those spreads a little tighter. So it benefits us and it takes it away. And at the same time, we don't pay commissions anymore.
It does. And what I wanted to bring to Bill was you talked about the passive bid, and I suspect probably only about 40% of our audience knows what that is. So can you take a few minutes and go into it and describe what you're talking about when you say that that's more important than a couple of
account bid, right?
Yeah.
Okay, sure. First of all, I would say anyone who wants to learn more about this, and if you have any money invested in the market, you should know more, is you've got to follow Mike Green at Professor Plum 99, I think it is, on Twitter. And he has a Substack as well. And basically, the premise of Vanguard, Jack Bogle, was the market is smart. Over time, it's a discounting mechanism. It figures things out. And if we can just achieve the returns of the market over time, we'll do just fine. We are going to piggyback our investments on the back of the wisdom of the crowd. Now, markets at inflection points are always dead wrong, but over time, that doesn't matter either. That's my ad lib, not what he said. But if you're 10, 12, 15%, I don't know what the number is where it doesn't matter. You are riding on the coattails of other investors. But when you get to be a big enough size, and given the nature of the capitalization weighted indices and the float with the way they calculate these things, it is the case that they distort the biggest market caps the most. That's why these behemoths trade like what we used to call what we used to see in $1 and $2 and $3 stocks, right? And it's because the market share now of Vanguard and BlackRock and these target date retirement funds is 40 or 45% of daily activity. Then when you layer in the other things, the other ways to, it creates a certain kind of momentum in a certain class of stocks. So that gets reverse engineered. And a lot of hedge funds do the same types of trades, although they wouldn't say they're piggybacking on passive. They're just following the momentum created by the passive. So if this mindless robot is in there every day and it's close to half of the action, it just pushes prices up in a certain way that has zero to do with the fundamentals. How can Apple have a 3 trillion plus market cap, have a forward estimate of about 30 times? They haven't really innovated anything in several years. The earnings for the last couple of years are just about flat, a little bit higher. How can that be? There's nothing there that would never happen. And it's been going on for a couple of years. I mean, there's a reason I suspect that Buffett has sold almost his entire position of a company he said that was a permanent holding. But it's an example of the distortions. I mean, that's why these companies that get in these indices, that's why Palantir kind of played the games they did to get in the queues. Guys have managements have figured out that these mindless buying that goes in with, that's a different kind of indexing. Well, if the price of the security has zero to do with fundamentals, and it's miles away from what a rational person might say a business is worth. I mean, I know there's no such thing as that perfect price. If something comes along that upsets the apple cart, these things can fall so far. The risk is when this stops working. Now, there essentially would be, I don't know where a big enough bid would be for some of these mega caps. And that's the risk. while it's going on, it's like while it's going on, it's so much fun, right? It's like, but when the party ends, it's going to be a disaster that won't be worth the size of the party while it was underway. Did I do that in good enough
Are you?
detail?
Yeah, that's
Yeah,
that's perfect. And
that's
have
right.
you? Are you saying here that you no longer like looking at the Magnificent Seven for future growth? Are you getting out of those things like Buffett or no?
Jesus, I was never in them. Are you kidding me?
Okay.
There, I
Yeah.
could never have slept at night with a big position. I don't trust my trading skills well enough, although I do trade. Ran a short only fund for 12 years, and it was a short only fund, not just short. So I mean, I had to learn how to trade. So I mean, I know how to do it, but it's not my preferred way to operate. But I couldn't own those. What it has caused me to do, the modification I've made to what I do is somewhat like, I don't know if you saw David Einhorn's given us a couple of interviews. He completely changed his approach to value investing because he realized this exact thing. It means there are less people out there looking for ideas and doing what we would call fundamental research or even technical research, because those guys are going out of business, and the money is moving, more and more money moves to passive. So he's altered what he looks for, and he has criteria that he changed, and he now has a different set of criteria. What I've done is I've tried to find, I've spread my individual company choices out to things that are smaller, where it won't take as many people to get it to go, and where the companies aren't really GDP sensitive necessarily. So I've altered my criteria, a decent amount of exposure to precious metals in some mining companies, but even the ones that have done well haven't gotten any love there. So it makes individual company rifle shooting much harder. And so I've tried to change how I try to rifle shoot. And it's also changed the way I try to put on shorts as hedges for the same reason, right? When I was running a short only fund, one of the things I worked really hard at was trying to understand what I would call the personality of the individual stock. What makes it move? What makes it trade? So I can figure out how I need to trade around my position. And trying to figure out the personality of stocks in the market as it is constructed today is quite difficult. So it's modified the way I make my picks, if that all makes some kind of sense.
It does make sense. So you say precious metals. What else do you like for 2025?
I have a small handful of biotech stocks, where for a variety of different reasons. I don't have any one of them as a big position, but because obviously you don't need GDP growth there, and if their products work and do well in trials, you can do well. And I have a company that I think can grow. It's got margins. A company called Pure Cycle Technology. It's an ex-SPAC, or it's still a SPAC, but they've gone from the theory to almost proving that they can make what they claim they can make, recycle plastic. And if it works, which I think it will, they won't have any competition, and they'll be able to project finance. So they won't need capital, and their margins will be great, and they'll be able to expand like crazy. It's like well, in the 80s, we made a lot of money. The company, my partner said, the company I was with, partner in waste management companies. And the idea was demand's kind of insatiable, but the ability to get a place, the dumps or the incineration facilities for toxic chemicals were small. Nobody wanted a new one. So you had a barrier to entry. So what this company has is a barrier to entry, margins, growth potential. And so I'm not trying to push the names that I like, but that's a sense of the kind of things I've tried to pick, because I know the environment is going to be so dicey for the reasons we talked about. I want to try to have companies that don't need any outside help. I've kept my precious metals positions. I've chosen to own a few specific ones because I didn't want to, and so I have less diversification than is comfortable. I have a couple of really large positions. They've done well. I'd rather have 5 3% positions than 1 15% position. But there's so many mines that are in so many bad places, run by halfway competent business people, that I've chosen to find companies that are in the right jurisdiction, that have high grade mines, that can grow through the drill bit on their own, and those are few and far between. And consequently, I've had to have bigger positions than I normally would like. And so that's the kind of portfolio that I run. some rifle shots covered with some hedges when I'm nervous, like now. And then, but the bulk of my position was been the precious metals and just a small handful of companies. I mean, I'll give you the names if you want, but I don't have to give them to you.
I would love that. Yeah.
Yeah, I'd love to hear.
Two of them reported their production numbers this morning. One was Alamos Gold, and the other one was Wesdome. And their Wesdome's all in Eastern Canada, and Wesdome is mostly there as well. They both increase the production numbers next year. They have their costs under control. They can grow. Wesdome is very cheap. It was in the penalty box because they stumbled coming out of COVID. They had some issues with getting equipment. And so then the stock got crushed, and then they kind of came back to normal, and now they're growing. Both these companies did quite well last year, but neither is expensive.
Do you think our impending invasion of Canada will have anything to do with the? I
thought they were going to reverse merge. I thought we're going to trade the West Coast and we're going to give the East Coast, the West Coast of the U.S. to the East Coast of Canada, and then the saner parts of the U.S. are going to get Western Canada ex Vancouver. Anyway,
in my head, I was going to ask that question completely straight just to see you go.
Yeah.
What?
Anyway, so
can you give the name of the plastic company too? Or
yeah,
no?
Oh, sorry, I thought I did. It's called Pure Cycle Technology, symbols PCT. Okay. And so I own those two miners. I also own Agnico Eagle, and I also own New Gold. Those are the bulk of my positions. That one, New Gold, doesn't quite tick the box. The other three do, but it's close enough, and the position's smaller. Anyway, it's not necessarily, I mean, not that my picks are the best, but that's kind of the logic I used, which I think might be useful for other people where what I've said kind of rings a bell.
So let me add, this is almost an advice question for, I'm going to say it's for our audience, but it's for me. One of the things I like to do when I'm looking for trades / medium-term investments is I like to go, I don't have the knowledge to go into biotech and say, this company looks like they're going to be first to market, or, I hear people talk about biotech stocks. Usually when a biotech stock is mentioned, somebody goes, yeah, my cousin is related to the garbage man's gardener. And, they come up with this they're about to patent a product. It's like, shut up. You don't know. But what I do like to do is I go and I look at the holdings of small cap managers that I respect. People like Robert Rifkin or John Montgomery or Katie Potts, for example, from Herald Investments. And I'll look at some of their smaller holdings. Some of the stuff they haven't been in very long and they don't have huge positions in, right? And sort of stole this from somebody, and she knows who she is. But and then I'll just look at a chart and I'll see how the chart looks. And, use some of the typical technical stuff I've always used to decide whether I want to enter something. And I'll say to myself, this is a trade. I'm not holding on to this for a long period of time. What do you think of that as a strategy to sort of build a little bit of sort of high beta alpha into a personal strategy?
I basically do a variation of what you just said. I think I mentioned I have 3 biotech stocks. Close to, I got another one I got my eye on. But I don't have the ability to analyze these. One of the ones that I own, a buddy of mine was being considered for the CEO. He didn't get the job. He came in second place. But he said, look, this is going to be terrific. And so we invested in an venture round. Then we got lucky because the fellow that ran Seattle Genetics came to work there. And the stock ran from 5 to 30. It's back to 9. It's a company called Immunome. They have a slew of cancer potential products. Now, I've taken my cost base out of it. I don't know if it's going to work or not, but I got into it because a good friend of mine was going to be the CEO, and he looked at it. He knows what he's doing. Parenthetically, he is now CEO of a biotech company called Quince, and they got a product that is in phase 3 trials in a real small market. But again, I invested with him in the venture round when he got in the company, and now he's running it. Will it work? I don't know. So I don't have the expertise. The other one is a company called Leap Technology, which I found because I've talked to Mike Taylor, who runs Pink. And if you look at his holdings, I think that's a tremendous pond to fish in because he is spectacular at the healthcare segment and really knows this stuff really well. He used to develop these compounds. So it's way over my pay grade. All I can do is risk manage the position and do what you did, Bobby, which is, okay, let's see, are the people that seem to understand this buying some? How does the chart look? In this kind of a market, do I want to trade it or hold it? I'm doing the same things you are. I've just figured out a couple of smart people I can piggyback on, because if I didn't have those two fellas that I could kind of rely on, there's no chance I could ever touch one of these biotech stocks. I know zero about it. And I don't even know how to, properly analyze whether a compound's going to get through or not.
It's funny. I just looked at the immunome chart, and I can actually discern when I would get into that just from looking at it. And that's one I hadn't heard of. I mean, that's one that, again, I'll keep it on my radar. By the way, you guys who are watching this, you're watching this about 2.5 weeks from when we're recording, and it's nowhere near a buy for me yet. So I'm not recommending anybody buy that or anybody short it.
Doing is answering your questions. I'm not suggesting any.
Yeah, no.
And I wasn't.
I think that's implicit in this kind of show.
I don't want to give symbols because I think somebody should buy them. I'm just trying to make my thoughts seem logical and cogent, if that's possible.
Can we, for about the last 5 to 7 minutes here, can we flip back to the bond market? I have a question about that.
Sure.
Okay, so here's what I believe is my almost base case. I believe that we will run bigger deficits in 2025. I believe that Trump will follow through on tax cuts. I don't think the globe is going to stop buying our bonds if they can see the light at the end of the tunnel. However, if they do, and I believe if the 10-year yield goes to, I throw out 5.25, but there's no math behind it. There will be a level that the Fed will come back in and support the bond market in the interim, which I think would be bad for the dollar and great for your precious metal trade. What am I missing on all that scenario? Do you think it's right?
I think it's plausible. I think there are so many different paths that are plausible, and some paths are dependent on the path that came before it. That's entirely possible. And again, why this is such a fluid environment in terms of trying to sketch out how you think events may play out and what you might do, that I think you just have to be really flexible and see the different paths and say, okay, we may go down this path for a while, that may change. I think that's entirely possible, Jim. I mean, maybe there'll be a number where it trades to 5.25 and everyone says, I don't care, 5.25 gets the job done. When I first got in the investment business, I was lucky enough to be mentored by a really smart guy who'd been around for a while. And I was asking him, how was it that bonds were sort of docile for a while in the 70s, even with inflation ripping? And he said, there was a bond issuance when the first time treasuries traded at 8. They were called the magic 8s. And he said, everyone just said, I get the job done at 8%. It doesn't matter. I don't need an outlook. Well, that turned out to be kind of a bad idea, really. So that's a historical thing that happened that is exactly what you're discussing at a different price point. So sure, that could happen. That's what I mean. There are so many possibilities, and that could play out for 3 months and then turn to crap, or vice versa. I mean, I think we have to expect the unexpected and be extra flexible in our minds and in our trading for what 25 looks like it could be. I mean, that's kind of how I've tried to think about it.
Bobby, got the last one.
What's your worst case scenario for 2025? And I don't mean for the whole year. I mean, obviously, this is, I would say, think second quarter. What's like a worst case scenario, whether it's from the presidency or whether it's a breakdown of some of the things we've talked about?
Here's my worst case scenario that seems plausible. I don't know this is the case. And, Grant and I are going to interview Mike Green in a couple of weeks. I mean, not to promote our podcast on your podcast, but I'm
No, please. We love Grant. Promote it away. We want that. What's your podcast?
My question to Mike is going to be my theory. When I saw the Fed said they were going to cut rates, they hinted at it last March of last year. It made me very careful on trying to be short. And I thought, God, if these idiots do this, we could have a blow off. We've kind of had it. It's been lumpy. It's been basically recently, it's been only in the big cap stocks. The market got quite narrow towards the end of the year, and this year's been kind of funky so far as well. But I thought if we have a big enough blow off, and maybe the passive bid won't be quite enough to support the weight of everything, it's looked like that may have played out. So if the passive bid wasn't big enough and the bond market was weak and they had to reallocate, you could get maybe an air pocket in the market. And if you got an air pocket, you could drop 8% or 20% in 2 days, no problem.
seen it.
People got scared.
Yeah.
And so if that were to happen, that would upend the economic things, but then that might help the bond market, and then it might change the way the Doge is perceived and all. So I think that's my wild card catalyst that seems impossible, but seems plausible to me. And so I'm kind of on red alert to see if that's starting to happen. Other than that, I think the danger is the bond market continues to get hit, and rates go higher than people. Jim's magic number turns out to be 6, not 5. I'm just making that up.
No, I get you. Yeah, there's a number out there.
So I think, barring some weird dislocation in the stock market, I think the real dangers are in the bond market. And that's why how the Trump administration plays the game and how well Bassett can sell what he's trying to do, and all that's going to matter more to, I think, in terms of how equities do than anything else.
Is them trying to sell all the short end they can, the Yellen-led Fed, is that kind of like burning the crops as the army is leaving, you think?
Completely irresponsible. She was so goddamn irresponsible. She was terrible at the Fed, and she went to Treasury and she was worse. I mean, that woman is completely incompetent and should never have been near either of those two positions. And that is not a partisan. Look, people, when you criticize somebody who happens to be on the perceived other side of where you are philosophically, they come after you for your. I don't give a damn about politics. I care about economics and financial and long-run outcomes. If you have strong economics and strong financial wherewithal, then you can go do good works. If you try to do good works and you blow up the economy and the financial markets, you're toast. So that's my philosophical perspective.
She's a clown on her best day. I don't even think she could follow this conversation if she was in it. Like, what are you guys talking about? Yeah. And she sounds like, what was that cartoon character, the little chicken?
Look at hers and Bernanke's comments about how easy it is to end QE and all. They're just completely naive.
Right. Bobby, should I play us out or you got anything else?
Good to go.
This has been The Future's Edge. That's Bill Fleckenstein, President and CEO of Fleckenstein Capital and the author of Greenspan's Bubbles, The Age of Ignorance at the Federal Reserve. And always a good listen. Thank you for being here, Bill. Where's the easiest place for them to find you before I give the final speech?
My website, where I write a column every day and answer questions, is fleckensteincapital.com. It's a pay site. It costs a whopping $12 a month.
Fantastic.
Or you can find me on Twitter. My handle is @FleckCap.
Right. Okay, this has been The Future's Edge. I'm Jim Iuorio. That's Bob Iaccino. None of this works without the support we've gotten from you guys, the DMs, the retweets, even word of mouth. You guys have been wonderful, and this thing has grown beyond our wildest dreams over the last couple of years. Thank you. Also, thanks to our sponsors, Hardcore Italians. Go there for their Valentine's Day specials. They have great stuff. Use our promo code for 15% off. It is FU, and that stands for Finance Unfiltered, people. Okay. Yeah, we're that way. Also, Independence Arc Farm in Arkansas. Some of the best meat you will ever have. These guys know how to do it. They are fantastic. Look them up. Eat more meat. Again, Bill talked about cancer drugs before. We think we cured cancer on this when we had Dr. Robert Lufkin on. All you have to do is watch the show. We cured cancer on The Future's Edge. Thank you guys very much.